Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark looks at the rocketing stock markets and whether we are due for a major correction. The publisher of the Campbell Real Estate Timing Letter, Robert Campbell, talks about how high-tech may make real estate more affordable, whether Trump's tax cuts are good for real estate, and how so many people in the equity markets have no sense of risk. Market historian Bob Hoye tells us the mining for Bitcoin is threatening power supplies in some places in the U.S. Plus, at the end of the show, we'll have company showcase updates from Larry Ray of American Manganese, Cascadero's Bill McWilliam, Cypress Development's Don Huston, and MGX Minerals' Jared Lazerson. We'll talk to Ross Clark right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp, RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, the CEO of Chartworks. Welcome back to the show, Ross.
Good to be with you, Jim.
It's getting to be like a broken record if some of you younger people can remember what a record is, although you do like to scratch, as you say, vinyl. Ross, all the major markets again setting records for the past week. When is this going to end, or should we just celebrate the fact that it's happening?
You got to be on board the play. It's a momentum run. Even the turn of the year trade, which was the Russell 2000, which just did not do much at all in the early stages. All of a sudden, the middle of this week, it came to life. So it doesn't seem to matter what it was there out in the equity side of the equation. You've got records just about everywhere, and so it's. And we've got so many different ways that we can measure this, and everybody's got their own techniques. I look at now 14 months of consecutive higher lows in the S&P. That's that's getting up into record territory. It's 96 weeks since the Dow and the S&P crossed their 50-week moving averages, and we haven't been down below the 20-week since we crossed the 50. That puts us into really extreme levels as far as that's concerned. Eventually, you can still run for maybe 120 to 140 weeks of upside, but you generally will have, no, I shouldn't say generally, every instance that we can find, you do get corrections down below the 20-week average. So that's going to be in maybe the 5 to 7% bracket in terms of the type of correction you might look for. But as we've stated along here, that even once we have the first correction or the first month with a lower low, you will invariably then have that follow through with higher highs afterwards. So for now, trend is your friend. Maybe have a little bit of cash on the sidelines, but be prepared to spend that if we get a big break of any magnitude. I should say big, being maybe 5%. The catalyst could very well be something in terms from the interest rate side of the equation, because that's the only thing that really seems to be out there that's a potential negative.
I remember Black Friday, January 25th, 2 years ago. Are we going to have a major correction like that again?
Well, to be honest, I'd like to see something like that. A quick, hard clean out. Now, that one did not come out of the blue. We had a bit of a rolling top going into there. So, and that did not have the same type of strength ahead of time. So if you started to lose a little bit of momentum up here, put in a small break, I think we had a one-day break this week. That was it. But if you had more than a 1 or 2 day break and went back and just retested the highs but couldn't go through, yes, that could set you up for a flash crash type of event just because we've had such a run. You take a look at the vertical markets that we've had in the last year or two here in specific areas like the marijuana stocks. A year and a half ago, they topped out with a big bubble, corrected quite hard into the spring. You take a look just here at Bitcoin, the blockchain items in the last month. These are down fairly significantly. The first, we had upside exhaustions, followed by good hard corrections down to the 50-day moving averages, and we got some great what I call springboard trades or capitulations. We bounced back and became overbought the beginning of a week and a half ago, and now we've sold off back down to the 50-day average. So when you have these big excesses, you expect to see some pretty good flush outs afterwards, more so in individual stocks than you do in broad indices like a Dow or an S&P. But excesses invariably get people overexposed, and the inevitable corrections are there. So, be forewarned.
What's happening with the U.S. dollar?
Well, we had the potential here about 2 weeks ago for a really good bottom. We'd had a decent rally off the lows in late in the year, came back down to retest, and we got some nice capitulation signals. And what you needed to have was a rally back through its initial resistance, the dollar index, and above its 20-day average. It failed to do that this week. And it has now moved down to lower lows. And you've got the euro at new highs for the move. So the potential for a reversal was there. It's not in play. And so on the other side of the equation, you've got the seasonal play in the precious metals getting a little bit of a fire underneath it, especially in the gold market, not so much in silver. But the gold's doing really what we wanted to see here. We are now, we look at the 8-year cycle low, which we believe topped just over a year ago, not 2 years ago. And that's now 56 weeks from its low. We put out a report a week ago describing what to be looking for as we move into what should be an interim high here in the next month or two, and the type of correction to look for. So with gold up into the 1339, 1340 range, it's probably got a little bit more left in it, but as I say, we've got the guidelines that we're offering to people that they should be looking at.
Ross, thanks a lot for the update.
More than welcome, Jim.
I'm speaking with Ross Clark, CEO of Chartworks. Coming up, real estate timing letter publisher Robert Campbell, next on This Week in Money.
Always consult your investment professional before making
Aben
any
Resources Limited is a
investment
gold
decision.
exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Robert Campbell. He's the publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He's speaking to us from sunny San Diego, where you say you're in a cold wave. It's down to 50 Fahrenheit, 10 Celsius? Something like that?
That's right, Jim. We're down in the low 50s nowadays, and that us Southern Californians are all bundled up with like it's snowing outside. But that's why we live here.
Well, see, you're down to the average winter temperature for Vancouver. Now you know what we experience. But you don't. Do you have the rain?
A little bit of rain. We got about 2 inches of rain the other day. You know, we had all those fires, the worst fires we've had in a long, long time. Then it rained like hell, and all the mud slid down the hills up in L.A. from, Los Angeles to Santa Barbara, and about 40 miles of Freeway 101 had to be closed down, and, literally hundreds of homes were destroyed. So, I guess that's our risk down here. We have fires, and then we have mudslides afterwards.
Bob, we were just talking off the air about how technology could change the way real estate values are done. Can you tell us a bit about that?
Yes, that as we know, technology is making things far more efficient, not only in the personal level, but also on the business level in a big way. And I just read a report was saying that because jobs can be done today via technology, and the cost of housing is so high in certain areas in the United States and the center cities, and especially along the coast, that what you're going to see, and this is a trend that has already started, is that people that can do their jobs from home are going to start moving from the urban areas into distant outlying areas where the cost of real estate in many areas is maybe 50% less. And I find that's a very, very interesting theory that to consider that, you can't act upon that right now, but it's something to keep in mind that as time goes on, maybe we won't see the high price appreciation that, we've seen in the past in the big cities, and the low price appreciation in the suburbs. I mean, way out in the boondocks, if you will, and we might see start of a rebalancing of that. So I just find it fascinating. I hadn't considered that before, but especially with these millennials nowadays, all these kids coming out of college that most of them are making an average wage of $12 an hour. You can't afford a house. You can't even come close to affording a house. But if all of a sudden you were to move from someplace like San Diego, where the average price home, the median price home is close to $600,000, and then move out to the high desert or someplace where you can get a cost, a house for 1/3 that cost, people may start doing that. And it's just something to keep in mind that, things change, Jim. As everybody knows, things change. And like Charles Darwin said, he goes that survival, doesn't depend on those are the people that are the strongest or those are the people that are most intelligent, but it depends on those people that are most adaptable to change, that adjust most correctly to change. And I think it's an interesting trend that I could see that developing over the next 10, 20 years.
Well, I work from home, and most of the financial industry experts I talk to weekly work from home as well.
I can see it. I mean, we know it's going that way. I mean, especially with the things, and we have other trends in mind too, of course. I mean, with the robots, I think we've all read recent reports how robots could eliminate, almost up to 50% of all jobs in America. And it's my theory that in the future, that all of us that are gainfully doing important things are going to have our own personal robot to help us do those things, Jim.
Well, I certainly could use a Roomba. I think the thing is, my place is so messy, I think the Roomba would end up being collapsed in a pile of books about airplanes or something.
Well, he could take care of some of that menial, that low-skilled labor jobs for you. That's the point. But it's amazing. But it's interesting. And, the point of survival and of success in this world, which leads us into this radio broadcast, is you have to correctly adjust to change. If you don't do that, you will not be successful in life.
Is the presidency of Donald Trump good for American real estate?
I think it's, I could see it being a small net positive. And I think it being a small net positive from the standpoint that, the taxation rules regarding real estate haven't changed that much, but Trump's lowering the corporate tax rate to where it is definitely going to mean that corporations are going to start being able to do more business, more manufacturing in the United States, which is going to lead to job growth. And manufacturing jobs, for example, are higher paying jobs, and that's going to support housing prices. But I don't think it's going to be a major impetus to real estate values by themselves.
Have U.S. real estate markets recovered back to the highs of 2007?
Yeah, they absolutely have. And which really surprised me, because after that bubble, that last bubble that was, purely artificial, with the easy financing, with anybody that, anybody could get a loan with no money down and lie about how much money they're making. I thought it would be 20 years before we'd get back to those old highs, and it only took about half that time. Actually, it took 11 years to get back to those highs. What's interesting right now about the U.S. housing market is that it is growing on an annual basis faster today. I mean, home prices are appreciating faster today than they have in over 3 years, Jim. So the price increases are accelerating right now.
Can people carry the debt load associated with those homes?
How are they doing it?
Yeah.
Well, they're continuing to do it with low interest rate. And what's interesting, and that's a really great question, the number of first-time home buyers is fairly low by historical standards. You know how people how housing prices are accelerating higher at a faster pace nowadays? You know who's buying those higher priced homes? People that own existing homes, Jim. They're taking their equity from their existing home and trading it up into a more expensive home. And that's how they do it. That's how it's done. People go, well, gee, the average, you can't afford the average American has to be making, $150,000 a year household income to afford the median priced home. That's true. Well, is that close to the average? Not at all. The median household income is less than half of that. So how is demand increasing right now? People are trading up. That's how they do it, and they keep trading up until something triggers a turning point in the trend. People get scared for some reason, or just say, I can't afford this anymore. I'm not going to do this anymore. And then the trend reverses, and all those people that kept using their equity in their home to trade up, now they're underwater for the next 4 to 6 years.
In Canada, the largest bank, Royal Bank, upped its mortgage rates just before the weekend. Even though the Bank of Canada hasn't upped its official rate yet, are interest rates and mortgage rates likely to go higher in the U.S., and how will that affect the real estate market?
Yes, I think they are likely to go higher, Jim. I think interest rates are going to go higher across in the next year, 2 years. I could see interest rates just keep creeping higher and higher, and I think that's going to affect all the markets, not only real estate. I think it's going to affect the stock markets. It's going to affect the bond market, because essentially what it is the lower interest rates have enabled us to take on more and more debt without increasing the monthly payment. Well, when that turns, that's going to be, I think we're going to see a big correction in all the markets, and I think that who's going to get hit the hardest is the U.S. government. Because, in the past 224 years, the U.S. government accumulated national debt of $10 trillion. It has doubled to 20 trillion in the last 10, Jim. And it's going up right now. If you were to look at a chart of the American debt, it is going up at a vertical climb right now, which is an exponential function. And what would trigger and the reason it's been able to do that is the last 35 years, we've had falling interest rates. When that trend changes, and it will change as all trends do, that's going to be really, really difficult for the U.S. government to service that debt without printing money or creating more debt. And all that's going to do is add to the national deficit, and you're going to see that climb higher and higher and higher until, people totally lose confidence in buying government debt, which is going to lead to its own, which too is going to have huge negative consequences. So I think the big story in the next year or two is likely to be rising interest rates.
The U.S. dollar slipped a bit the other day. Would a lower U.S. dollar be bullish for the economy?
If it's, you know what it's bullish for? I don't know whether it's bullish for the economy, but it's bullish for commodity prices, which I think are going to, over the course of the next, 1 to 4 years, commodities are going to outperform equities, they're going to outperform bonds, and they're going to outperform real estate as the preferred asset class to be in. The U.S. dollar right now, as it sits right now, in about September of 2017, the U.S. dollar made a 2-year low. We're only just a breath away from taking out that low, Jim. So the U.S. dollar is definitely in a downtrend, and what that means, commodities are well correlated with that. So you're going to, and we've already seen things like, copper and gold. Has gold performed well over the course of the last 2 years? Absolutely, it's performed well. So I think the commodities are going to be a terrific asset class to be in relative to any other asset class, and that's all a function of a falling dollar.
Does a lower U.S. dollar make it easier for governments to pay down debt?
I'm not sure about that, because the lower U.S. dollar typically is associated with inflation, and when you start inflating things, the cost of living goes up. But yes, now that I think about it, for instance, yes, I would say it's easier to pay down debt, because Social Security in the United States is indexed to inflation, cost of living index. Well, I'm on Social Security. I just turned 70 years old. So, you know what my cost of living index was for Social Security last year? Like less than 0.5%. Do you think inflation is 0.5%? What they do is they manipulate those numbers, Jim, so that everything's going up like crazy, but they keep the cost of living, the actual index down. So yes, it helps it easier to pay off the debt. However, what you see going on right now, I think with Trump's, new tax plan and with his infrastructure program that's likely to be coming along, and if interest rates start rising, I think it's just a matter of time, and it's not going to be that long until we're looking at $100 trillion deficits on an annual basis again, just like we experienced during the last financial crisis. So I think the national debt of the United States has nowhere to go but up, and at a continuing accelerated pace.
We'll have more with Robert Campbell right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Robert Campbell. He's the publisher of the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He's speaking to us from San Diego. Bob, are central banks starting to slow the creation of money?
Somewhat. Somewhat they are. In some ways, I mean, like, for example, they say the U.S. is going to start unwinding its $4.5 trillion balance sheet. Is that a true statement? Yes, it is. How much are they unwinding? Almost nothing. Almost nothing. And in fact, that if you look at the balance sheets of the central banks around the world nowadays, they're at $14 trillion and rising at a rate right now of $1 trillion a year. So, and I think you and I both know, Jim, that all these central bankers are in cahoots. I mean, nobody's going against the trend. We're all doing the same thing because the world economies, to a large degree, are all in the same boat. So we're going up at $1 trillion a year that these balance sheets of these central banks are doing. That's why the highest conviction people ask me what's going to happen in the future. How high is real estate going to go? How high are stocks going to go? And if you want to know how high they're going to go, knowing that what the balance sheet and what the Fed's doing, how much money they're monetizing per year, it's really impossible to know because they can do this. They can take these asset markets to any height they want before the whole thing collapses like a house of cards. So the only thing you can do, Jim, is continue to objectively watch trends, track these markets, and just hope you're agile enough to get out at or near a top before the whole thing comes crashing down. Because again, all these things are accelerating higher. That it's an exponential function, and we know how those things end. They can't support themselves. It's just, if you study history, it's just like a law of nature. Anything that goes climbing at that rate of speed eventually has to come down. It's like a jet aircraft, Jim. You know, I was a pilot in the Air Force. The first time I went supersonic is what you do is you drop the nose, you go full burner until you got maximum speed, and then you lift the nose up in the air. So you're climbing as fast as you can possibly climb. And you got pedal to the metal all the way up at a near vertical rate of climb. That's called a quick climb. And you got to get, clearance, of course, from the control tower to do that so you don't run into the bottom of some other plane that's flying by. But even with that kind of power, do you keep going straight up in the air, Jim? Or does eventually you slow down and the nose rolls over and down you come? And it's the same with markets. It's the way it works.
Are central banks starting to slow the creation of money?
I say no. No. The evidence says no. No, they're still creating $1 trillion a year. $1 trillion a year is going on to their, that has to be monetized. I mean, when you see the balance sheets of these central bankers climbing $1 trillion a year, there's only one place that comes from. They're printing money to buy assets to keep interest rates low in order to stimulate world economy. So the answer is no.
Are the Trump tax cuts likely to propel stock markets even higher?
Yes, they are. They are. And of course, one thing that a lot of people don't realize, Jim, is that all markets, whether they're stocks or real estate or whatever, are driven way more by human psychology, i.e. fear and greed, than they are fundamentals. And fear and greed, there seems to be people that are investing in these markets nowadays, I think they have no concept of what risk is, especially the new people that have come along. People's memories are only about 5 years. Go back 5 years, people don't even have a clue what happened. So I have no idea how high these markets are going to go. I think that the U.S. stock market, I wouldn't bet against it going up to 40,000 before the whole thing comes crashing down. And so it's not only the central banks, but it's the human psychology that people have lost touch with the fact that markets are risky.
The junior markets are heating up. Do junior stocks run higher towards the end of a major bull market? And do they signal that a bear market is around the corner?
We're talking about gold stocks now, correct?
Pretty well, yes.
Yeah. The juniors are way more volatile than the major gold miners, for sure. And, those trends, if you get in early on the right side of a trend, they're way more profitable. And if you're on the wrong side of the trend, you're going to lose a lot more money than you would by investing in the major gold miners. But yes, they do tend to be a leading indicator to both the upside and the downside.
Will those tax changes bring manufacturing back to the U.S.?
Yes, they will. They absolutely will. And the whole world knows this. Now, when Trump lowered corporate taxes to 21%, from 35% to 21%, the whole world went, holy crap. Now we got to do the same thing if we want to keep these businesses in our countries. So they've got to do the same thing.
Of course, you could have the same effect as one of the major runners, sneaker makers, moved their factory from China, laying off 1 million people, and moved, I think it was Adidas, back to Germany, but it's robots making the running shoes now, and they employ just a handful of people. So just because you bring a factory back doesn't mean you bring jobs back.
Exactly. That's really a good point, because what that tells you, why predicting what's going to happen in the future is so difficult, because you have different metrics like the one like technology also involved as along with tax cuts, and everything's interacting with everything else, Jim, which makes it nearly impossible to know for sure what's going to happen in the future. Why is, my view is that the only way you can combat that and stay ahead of the trends is using data and be a trend follower. I know that's real boring to a lot of people, but I've been around markets, investing with them for 50 years, and I'm fully convinced that the best strategy for making money and not losing it in markets is a trend following strategy. But you're absolutely right. Robots. What effect as far as knowing what's going to happen in the future, for example, what's the effect on global business going to be in the next 20 years? Automation. How do you know? I mean, you can't know. It doesn't sound like it's going to be good, does it? Well, all these low-paying jobs that are going to get replaced. I think it's Wendy's. Wendy's, the fast food restaurant here in the United States. They said, minimum wages are climbing so high. They said, we can't, that we are being forced to start automating cashier jobs. So it's going to happen.
Well, the McDonald's right here. Now. Yeah, Bob, the McDonald's right here. Mostly kiosks there where you put in your order. There's a single kid at the counter to bring it to you.
Right.
Also, what I'm thinking about.
Yeah. Because you just can't look at one isolated thing that's happening like now with technology. But I mean, you got to think that these changes are going to happen. And like Charles Darwin said, the people that survive are those going to be the ones that most successfully adjust to change. So I guess we just got to keep adjusting. And for those people out there that think that aren't attuned to it. In the United States, there were 400 Fortune 400 companies in 1955. 1955. Today, Jim, of those 400 companies that were on the list in 1955, only 12% of them are on the list today. The co-founder of Intel says it pays to be paranoid. I mean, here's a multi-billionaire telling you it pays to be paranoid. That's not because he's a doom and gloomer. That's because he's a realist. Real interesting.
We haven't talked about the impact of 3D printing, but I've seen videos of where 3D printing using a crane-like device can make a house in about 2 hours. I was thinking about 3D printing, just going to your local car dealer. They have the chassis, and you get to design and print out the body and the rest of the car yourself. Right there, you come back in 3 days, and there's your model dream car that you designed yourself.
Amazing. You know what, Jim? I'm a lot older than you. I mean, I'm 70. I know I'm older than you.
Not a lot.
Us older guys, you're an exception to the rule. You think us older guys are adapting well and learning about technology like the younger people are? No. Some of the stuff just flies so much above my head, I can't even start to understand it. It's like Bitcoins. People ask me about Bitcoins. And I said, I had no idea. I can't get past the technology, how this stuff works. But I did hear Warren Buffett Warren Buffett is 88, he'll be 88 years old, real soon. And they asked him about Bitcoin on an interview the other day. He goes, "Hey, I don't understand it either." And he said, but I have a pretty good sense for these kind of things. And he said, if I could buy if a 5-year put was available on Bitcoins, I'd buy it.
Can cryptocurrency survive and compete with government-issued fiat currencies?
I don't understand the technology or the concept. I'm not qualified to comment on that, Jim. I'm sorry.
Do you think the price of oil is going to continue to rise in this year?
Yes, because oil's a commodity, and we talked about commodity prices. Commodities are going to be strong again, for the next 1, 2, 3, 4 years. Commodities are on the rise again.
Is 2018 shaping up to be the year for gold and silver?
Yes. I think gold and silver, they too are commodities considered, even though gold's money, it's still a commodity. Gold and silver are going to perform really, really well. Especially gold. It's kind of interesting, since the financial crisis here in 2007, 2008, that we've been printing money like crazy, printing money and creating debt like crazy. And what's China and Russia been doing with respect to gold during the last 9 years? They've been buying gold. And I think that's really interesting. There's a strong contrarian aspect to what I do. I know those guys aren't stupid, and I know Russia, I know China are more, the Eastern philosophy. They think more longer term. There's a reason why they're accumulating so much gold. It's not only for economic purposes. I think it's for survival purposes. They know that's going to be the premier asset class within the next 10 years. And they got it. They're buying it, still buying it.
Is the consumer debt bubble continuing to grow, and will that blow up at some point?
Oh, absolutely. And it's still continuing to grow. And it's because of low interest rates. I mean, you can buy a car, for example, on a 7-year loan with 0 interest rates. I mean, so, they've extended this thing out. Only 10% of all cars are purchased for cash. I don't have the exact number, but when I was a kid, I bet you it was kind of reversed. Hardly anybody got a car loan, Jim. Everybody paid cash. Of course, when I was coming out of college, in the late 1960s, a new car cost $3,000. So, I mean, yeah, but, and still the average income back then was around, around $12,000, but a car cost, $3,000.
And a house costs $25,000.
When I got out of UCLA, I could buy a house in San Diego for $70,000. I could have got right out of UCLA, gotten a job that paid me $12,000, bought a house because I had a down payment. I was always investing and worked hard and had some money, and could buy a house. That's why I say today that kids today have it much harder than I had it, just for reasons like that. Can kids come out of college today and buy a house in San Diego? Not even close. I'll tell you something else that's interesting about housing. In the last 10 years, the number, as a composite number for the number of people that are bringing other people into their households that are doubling up, 10 years ago that number was 30%. Today it's 40%. And I'm just using approximate numbers, but I'm not too far off on that. Isn't that an interesting metric? What does that tell you about the economy, Jim? The real economy. That tell you why Don Trump got elected? It sure does.
When real estate bubbles pop, does high-end real estate fall a larger percentage than mid to low-end real estate?
Interestingly, it's just the opposite, and the evidence supports that conclusion. And the reason for this is, I've been in real estate in the real estate business my entire life, and I always thought that the high-end market crashed the most, and the low-end market didn't. But it's exactly the opposite. It goes counterintuitive. And how I explain this? What if I had to come up with a reason to explain this? There's more people that have access to the low-end market because there's people that have less money than more money. Low-end market, and they are more susceptible to making investment mistakes and fear and greed than people at the high-end market. Anybody that owns a high-end home has a brain in their head. Absolutely. I mean, even though the average IQ in the world is 100, let's say, is the benchmark, what's interesting is half of the population is below that. So my theory is the people that buy at the low end are less smart than the people at the high end, and that's what takes it to higher levels, during the rising phase, and to lower levels during the falling phase.
Family members who are in the housing business say during the recessions they continued to make high-end homes because rich people remain rich even if the economy goes down. That was their theory.
Well, to some degree it is. I mean, if you look at household wealth in the United States, you find it's very cyclical. That after the dot-com boom that went bust in 2000, household wealth came crashing down. Then it went soaring back to new heights during the real estate bubble. Then it came crashing down again. Do you know what falls? That rich people own financial assets. Poor people don't, Jim. Rich people own stocks and bonds. Poor people, the average American doesn't own stocks and bonds. So that's where those people are most vulnerable.
Is the left-right divide in the U.S. continuing to grow, and could it affect the economy?
Which divide?
The left-right.
Oh, that's amazing. That is really amazing and a great question. Yes, I think it is. I think it's going to have huge negative consequences. In fact, you're seeing that same kind of divide all over the world right now. You're seeing it in Europe. You're seeing it in Britain. And where central government, which is the left, the people that love socialism, and the conservative that like smaller government and more free markets and that kind of thing, the divide has never, ever, ever been great. And I came through the 60s, Jim. I came through the 60s and the 70s during the Vietnam War, which were exciting times and interesting, where the country was alive, but it wasn't violent then like it is now. There was some violence, of course, but not nearly what you have right now. People are absolutely insane nowadays, with committing violence and things like that, and it's all on the left. How do you explain that? How do I explain that? My only explanation is the lefts are socialists, and they know that the socialistic government where you're taken care of for the rest of your life is being threatened, and they're reacting with violence.
Could you see a major revolution around the world because half of the world's assets are held by 200 people?
Yeah, I could see that. I really could. I could see that kind of disruption. I could see that kind of disruption. In fact, what you're seeing right now, in fact, along those same lines, what you're seeing is in Europe, for example, where Catalonia is trying to break away from Spain. I could see major breakups, like the same kind of breakups that happened during Russia, that started in the early 1990s. I could see the same thing happening in the United States, Jim. And, when I was younger, I would have thought that's crazy thinking. I don't think that's crazy thinking anymore. People want, the movement today is people want control over their lives. They don't want to be controlled by a central government that has no clue what they're doing and is only interested in their own self-interest. So to what degree that leads to a revolution, I don't know. But there's a petition in California to separate from the United States because we're the 8th largest economy in the world. You know the reaction a lot of people I've said that I've read? Good. Let them take care of their own, because I think we're more socialistic in California than any other state. So that's another really interesting question. And just if you stand back and observe what's happening and not trying to imagine what's going to happen, but what is actually happening now, that trend there could lead to major changes in the markets, major changes in the asset markets. So once again, who's going to be successful in the next 30 years? It's those people that most successfully adjust to change.
Bob, what sectors are you investing in?
Commodities. I like commodities now. I like real estate. So the trend is still up, and I like commodities. All the trends of all the major assets classes, stocks, bonds, commodities, and real estate are all up right now. But, what's interesting about commodities is the new, has has hit a bottom relative to other asset classes, and they kind of go counter-cyclical, especially with U.S. stocks. And so commodities is going to be the best performing asset class, during the next, 1 to 3 to 4 to 5 years. You don't know how long it's going to last.
Bob, you have a seminar coming up in February. Can you tell us about it?
Yes. It's, the seminar is titled How to Use Historically Reliable Indicators to Pick the Peaks and Valleys of Real Estate Cycles. And it's in La Jolla, California. And if anybody wants to get some information about it, they can go to my website, realestatetiming.com, and there's a link on the homepage there that will give you information about that. It's really cool. This is the first seminar like that I've ever given, but after I published my book and started writing my timing letter 16 years ago, and I've increased my level of knowledge, so much, I'm going to share that information with many of my followers. So if they want to do this, track markets objectively and know when prices are peaking and when they're hitting bottom, this is going to be a great seminar for them. And the indicators I use, going back like almost 35 years, using them together and following objectively, they correctly call the trend and turning points in the market with a 85 and up to a 90% success rate. So we're talking about high probability investing here, not just pure luck.
Bob, thank you so much for being on This Week in Money.
Jim, always enjoy it. Thank you very much.
My guest has been Robert Campbell, author of The Real Estate Market Book and the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He was speaking to us from San Diego. Coming up, Bob Hoye, next on
Cypress
This
Development
Week in
Corp's
Money.
flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Bob, welcome back to This Week in Money. I understand all this mining for Bitcoin is a threat perhaps to our power supply.
Indeed. Just there was a note in CNBC December 11th here. Cryptocurrency mining puts electrical grid of small Washington County to the test. So it's using a lot of power. Now, on December 20th, I had been working on an essay on it that has exceptional speculation and compared it to, bubbles in history. And one of the things that economic theorists go on about on a great speculation is that they go up in the face of rising short-dated interest rates, and long-dated can go up as well, because they're borrowing so much money. So, anyways, theorists argue that the limiting factor to a great speculation is the power and the cost of compounding interest. So you're leveraged up, you're in it paying interest. But if you're making 20% every 6 months, hey, who cares about a rising short rates? So there's friction there. And then in the old Vancouver Stock Exchange, you'd get when it was a floor exchange, you'd have a great bubble going on a mining discovery. And they'd have to bring out extra floor traders just to transact business. And then the back offices got all jammed up with paper going through. So there was friction there. And then the other thing that goes on, and this even dates back to 1720 with the South Sea bubble, when it was, the South Sea Company was a quasi-government promotion, that as the stock rose, people exercised options, and then that was used to buy out or deeply depreciated notes and debt and stuff from the government. So, hey, speculators were making money, and so was the government. So there's no way they wanted this thing to shut down. But then people started coming out with stocks, new issues. London might have, I think it was almost 400 new issues done that year in 1720. So the government thought, oh, you can't have this money going into these other deals because there's less money for our deal. So they came in with the Bubble Act in, I think it was April or May of 1720, but it was too late. There was already too much money going into other deals, and the high on the stock, I think, was June 28th in 1720, and then dithered around in the summertime and then crashed in the fall. So what you have here with the Bitcoins is people are leveraging up, mortgaging houses, and then, as we noted, the electrical costs. So there's a lot of friction in the deal that has to be overwhelmed, and the only way you can overwhelm it is by having a constantly advancing stock, which it was doing. So there's been, over the last year or so, and let's talk about the GBTC, some terrific rushes in the stock, and then on our technical stuff, we'd get upside exhaustions, and you'd get a correction. Now, sometimes the correction would be a day and a half, and sometimes it'd be a week and a half. It varied. But there was another tool we have, which is the sequential sell, and now that's outside of momentum, and it's sort of a pattern. Well, on the 19th or 20th of December, it gave a sequential sell on the weekly, and it hadn't done one in 2 years. So I had this article, sort of page and a bit, written about the characteristics of exceptional speculations, and we tacked that chart onto it and noted that you hadn't had that reading, a sequential sell, in 2 years. So the correction or whatever it would be substantial, and which it was. It was like the 21st, all of a sudden, straight down. It gave up 50%. So then it bounced back, and then this week came down to the 50-day moving average, and often on breaks in different items that'll hold, and it did. So we've got some support here, and today a rally sort of like, how much? It was 8 or 9%. This thing moves, but here's 10%. So the main thing is that it gave a very good technical reading and then took a hell of a hit, recovered, and then has drifted down to support at the 50-day. So my guess is it'll dither around here for a while. Now, the forces in these things, Jim, are so incredible And it's, sure there are stocks involved and things like that, but there are very powerful things going on here. So I can't say, I would love to say that it's over, but you can't. And you got to wait until a couple of support lines are taken out, and then you can say it's over. Now, then moving along and with very good price gains, but not to the extreme you've seen in this cyber stuff, cryptocurrencies, has been the marijuana stocks. And I guess one of the main one is weed, W-E-E-D, that I've been following. And yeah, it surged up and gave some signals last week or earlier in the week, and it's correcting now. So again, here it's a different game, but speculation is very intense, and we're not sure how long it can go. But we'd been looking since Christmas that the first quarter of this year would be favorable for the stock market, general stock market, with nothing damaging going on in credit spreads and nothing damaging going on in the yield curve, and that has been the case. Interest rates are going up, though. Long rates are going up, and T-bill rates have been going up since June. So, but then this is typical of a boom. And speaking of which, we've had this financial boom since the crash ended in 2009, and it always looked like the stock market was ahead of itself relative to the economy. And of course, the street was always talking about that while the economy was improving, it was not very strong at all. It was the weakest period in decades. And so it was a good financial market and a poor economy, a poorly growing economy. And the stock market would get speculative from time to time and, of course, correct. And then going into the summer, I think part of the improvement in business activity has been natural. Like, hey, things have been improving for a long time. People have been buying houses and fixing them up and stuff, and cars. So there was something there. But I think also what really added to it is that the new administration in the States, until in office in January, you had the Obama administration, which was the most anti-administration that the U.S. has probably ever had.
Anti-business.
And then suddenly you had the Trump administration, which is quite likely the most pro-business. So, and then the struggle was to get the start of tax reform. And then all of a sudden before Christmas it sort of broke, and they got a tax package through. But generally through the year there's been a sharp drop in rules and regulations across the board. So it's proving out to be a pro-administration, a pro-business administration. And now you have some real economic growth in there. So you've had a booming financial market since 2009, and now you have a booming economy. So how long these two can run together, I don't know, but at the moment, for the senior indexes, we're not seeing any impediments. As I said, the credit markets are okay, and the other part for the first quarter we expected would be that industrial commodity prices would continue to rise, and they have. Now, this week crude oils and the crude oil stocks, or the oil stocks, are kind of getting a little overdone on the upside.
Bob, I've noticed we said we'd talk about commodities. The price of copper has been booming in the past year. I remember a year ago it was around $2.02 a pound. It's now at $3.22 a pound. Why the big hike in the price of copper?
Well, the global economy is still expanding, and the U.S. economy is becoming much more active, and base metals have been going up, and we expected them to continue to go up. We had a target of March. That's sort of a natural high possible for copper. But as I said, the crude oil and copper, or the base metals, are getting, or let's put it this way, oil stocks and the base metal mining stocks have had a very good move, and they're getting technically a little overbought. And it would be easier to make the call if these figures, the overbought readings, were coming in March, which was our target for the rise. So one never asks about why things go up. They just it's Jim. It's much easier on the mind to just look and say, oh, like last year at various times, the base metals were oversold, and now they're a little overbought, and that's a whole lot easier to cope with. But it's important, and also lumber, which became extremely overbought at what was it, $460 a while ago, took a terrific correction, and are now back to those highs again. But then you've got a general improvement in business conditions in the States, and specifically within that you're getting a number of houses and buildings, residential being built, that was destroyed by the storms of last August. So that's, you can see, hey, they're going to use some 2x4s and stuff like that, and plywood and stuff. So lumber has a very good price now too, or back to the highs. So times are good.
Bob, Royal Bank of Canada has jumped the gun. They've already raised mortgage rates, anticipating that the Bank of Canada will hike rates next week, and perhaps the U.S. Fed will do the same thing at the same time. Do the banks actually pay attention to what the central banks are doing, or do they set their own rates just the way they feel fit?
No, the banks have got economists working for them. The central bank has economists working for them, and they all think the same way, and they all really believe that the central bank sets interest rates, and we've shown over 150 years that the senior central bank, when you're in very dynamic times like now where rates are going up, they follow the equivalent of treasury bills up, and then when the boom ends and interest rates start going down, they follow. So you could take the central bank out of the equation, which was the case in the 1800s in the U.S. They did not have a central bank. They had the treasury system, and they didn't get a central bank until 1913. And you have the same business cycle. You get a boom, market rates of interest go up, and the bank rates go up. And so what you have in this, let's call it a modern world of central bankers, you have this intermediary, and you have far too many people believing that the central bank is setting interest rate policy. They're not. And it's very straightforward to look at it and say, we're on a business expansion, and as you get towards the end, or as a business expansion becomes mature, interest rates go up. That's all there is to it. So the Royal Bank raising interest rates, including the mortgage rate, that's business and credit cycle stuff, and it's got nothing to do with the Bank of Canada. And the Bank of Canada is just following the U.S. Treasury bill rate up. So it's not policy. The game that they play, the central bankers play, is to look like they're in charge. But anyways, we watch the credit markets very closely. The T-bill rate in the U.S. is still on trend for rising. It's up to 1.45%, which is not high when 30 years ago it would go up to 6% on a business cycle. But hey, it was down to almost zero, in 09 and 10 and back there. So, well, actually, it's just the last 3 years that the rates come up from next to nothing to almost 1.5%. So, the market rates are going up, and the bankers are raising rates, and that's appropriate. That's the way the business and the credit cycle works. So, but here's one that's going to come up probably maybe mid-year sometime, when the Treasury bill rate will start going down. And that would be the signal that the boom, both in financial markets and in the economy, is probably ending, because it's the demand for short-term money for traders that raises the T-bill rate. And then when the demand for leverage begins to wane, then the T-bill rate comes down. So, but what you get, like in 2007, the summer months, people were noticing the strain in the credit markets, and that the stock market was high, and the things were becoming nervous. So you had top spokespeople saying, "Oh, it'll be all right because the Fed will make a cut in the administered rate." And we published a few times in the summer of 2007 that interest rates for hundreds of years, short-dated rates go up in a boom, and they go down in a contraction. And then if you step over to the administered rate of a central bank, in this case, the Fed funds rate, you get the sharpest declines in interest rates in a bear market for stocks. So here you have top spokespeople in the summer of 2007 saying that, no need to worry because the Fed will cut rates. And then you went down, the Fed, sure, cut them all the way down to zero, while the S&P gave up 48%. And the irony is wonderful. So anyways, it's always fascinating to talk about the dreams of central planners and central bankers and economists, and they are there to provide exquisite irony against financial market realities, and they probably do it again here. So as a wrap on this, Jim, I would just say that so long as the short-dated rates, such as the U.S. Treasury bill, are going up, it means the boom is on. When it stops going up, you want to watch it, and if it starts going down, it means the boom's over. It's very simple.
Bob, thank you so much for chatting with us.
Yep, Jim, good to be with you, and we look forward to chatting next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Robert Campbell, and Bob Hoye. And thank you for listening. Questions for the show can be sent to info@howstreet.com. Plus, right after the show, we'll have company showcase updates from Larry Ray of American Manganese, Cascadero's Bill McWilliam, Cypress Development's Don Huston, and MGX Minerals' Jared Lazerson. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated.
Welcome
Executive
to Company
producer
Showcase,
is Tom
an
Allen.
advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Ray, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
You've just cranked out a new news release. What's in it?
Well, this is a milestone for the company. We've been invited by Bloomberg Financial to come down and actually talk about our recycling. And this is an exclusive meeting in Palo Alto, and it's in the United States, California, Silicon Valley, you name it. It's in the right area, and it's by invitation only. So it should be a couple of hundred high-ranking officials there from various sectors, whether it be EV cars, battery manufacturers, financial gurus. All of them should be there in the same room, and we probably have one of the newest technologies to talk about. So I'm excited. I'm really enthusiastic about going down and presenting the company and talking. As you know, I have no problems talking, so I'll be talking about our recycling opportunity. And the more I dig into this in the last couple of weeks, the more excited I get. So I see that we're definitely on the right track. We're getting world recognition, and we're in the right crowd. I mean, how many companies get invited to inaugural conference by Bloomberg? Not many. And certainly not in the junior status like we are. So, Jim, that's I think the shareholders, from responses I've got on emails and stuff, are very happy about that. And I see that working into something significant for all of us going into the future.
And Larry, I've seen too that Bloomberg is going to be working hand in hand with Canada's Business News Network. So you're going to get lots of coverage on both sides of the border.
Yes, I think that will definitely happen. We've been contacted by BNN, so they are watching what's happening with us. And now that there's a tie-up between the two of them, I think that we'll definitely fit into that slot. So, you know, the more the merrier, and sooner or later, somebody's going to step up to the plate and with a big war chest or the know-how to help us move this product forward.
And Larry, for new listeners, can you give us a thumbnail sketch of American Manganese and what you've discovered?
American Manganese is a company that's a critical mining exploration company. We have several projects, and strangely enough, we tie into the battery industry in all of those projects. Certainly the Brochet de Boule high-grade copper-gold property fits the bill for potential discovery of ore up in the RD camp with our joint venture partner. And the manganese property fits into the electrolytic manganese dioxide or chemical dioxide for making batteries, which we've already done. And of course, now we've evolved into a company that's going to recycle the lithium-ion batteries from EV cars. Now, that said and done, it didn't happen overnight. It's about a history of 80 years in the company developing this project, not by us, but certainly the last 10 years by us. And before that, the U.S. Bureau of Mines spent millions and years trying to take a low-grade deposit, and I'm talking 2 or 3% of manganese in the U.S., and evolving it into a process that would allow them to economically produce electrolytic metals. And unfortunately, it always failed at the end. In the third year of our processing, we came up with a solution that was comparable to costs in China with much higher grades in the 50% range. So we found, or Chemetco, our research lab, found that the chemistry should work on the cathode metals in a LAB battery. And we've reached the process where we're patenting that process now. And we're going to be raising money to build the pilot plant, bring in another 2 or 3 patented technology processes that will streamline the existing process that we're patenting and save money on capital and costs. So it's an exciting project, Jim.
Larry, where are you traded and under what symbols?
We're traded on the TSX Venture Exchange under the symbol AMY. We're traded on the U.S. Exchange under the symbol AMYZF. The Frankfurt Exchange under the symbol 2AM. We have a website out there, AmericanManganeseInc.com, and we can be contacted here on our phone, 778-574-4444.
Larry, thanks for the update.
You're welcome, Jim.
My guest has been Larry Ray, President and CEO of American Manganese. I'm Jim Goddard. We were speaking on January 12th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Cascadero Chairman Bill McWilliam. Welcome back to the show, Bill.
Thank you very much, Jim. Looking forward to this one.
We've got 3 projects to talk about. First of all, Tehran. What's happening there?
Okay, well, this is just an update on Tehran because we finished all the drilling that we had planned. We're going to start again on the drill program sometime in early 2018. What we're going to do in the interim, because our chief geologist is away and won't be back until February the 10th, I think, we asked the UBC metallurgical guys to give us another proposal to further reduce the cost of the reagents used in the leaching process. They've done that, and the board has agreed with it. There are 3 drivers that are identified, and they will provide the desired results. And that's about all I can say. We'll keep everybody in news releases updating the results, but this is a very, very positive step forward. And we just have to make the deposit a little bit bigger, and it's going to be, I believe it's going to be a world-class deposit, and we'll find a buyer with no problem.
Can you tell us where Tehran is?
Yeah, it's in northwestern Argentina, down by the boron deposits of Rio Tinto, and it's 220 kilometers basically due west of Salta, the main city in that part of the world, and 50 kilometers south of the railway and the power line and the gas line. So it's very well located property. You can drive right to it. There's no development issues. We've already done our community study. We've got the permit to carry on with the drilling, and we're planning another 44 drill holes.
Bill, you have an update for Serita Este. Can you tell us where that is and what's happening there?
Serita Este is a property that's in the Taca mineral district. It adjoins Taca, the main deposit that is owned by First Quantum, and is on a development path right now because they've been meeting with the government of Salta and explaining the issues and explaining what they got to do. They've got all their environmental stuff done. They've got a baseline survey, and I think in 6 months or so they're going to start preparations to build this mine. It's a big mine. It's going to be 180,000 tons per day, and it's going to produce a lot of copper and a lot of moly, and the gold values are a little bit low. Serita Este is 6 kilometers from the center of that pit, and it is a high sulfidation system, which means that it's a surface high sulfidation system, and it may be a manifestation of a deeper seated mineralized intrusion, like a porphyry below it. That's a very common model in geology around the world. These porphyry systems and porphyry districts usually have one or more porphyry systems, and they tend to be in clusters, and it looks like that's what we've got here. The difference with this and other properties is that the gold values are very high on the surface deposit, and that bodes well for a mineralized intrusion below. That increases the target size from hundreds of thousands of tons to hundreds of millions of tons. So this is a very important development. I do not have all of the data. We're just finishing the compilation at this particular time. I'll have a PowerPoint and a formal report from our QP geologist within this week, and I'll be able to release more information, and I can't release any assay information at this time. What I'd like to emphasize, and something I've said many times, is that this property has all of the issues of uncertainty with it, like any other mining property. And if this zone fails, the stock is not going to go to zero, and it doesn't really affect the value of our position in the Taca district. However, if the uncertainty turns out to be positive, then we're going to see a stock that's got lots of legs, and it's going to go much higher in value. The zone right now is 1,100 meters north-south, and it's 600 meters east-west, and it's still open to the west. So this is a big gold system on surface. We're very excited about this. We have the permit issued to do the trenching, and we will get the permit to drill the property in the early part of 2018. This is our number one priority at this particular time, and it will add more value to the company than any one of our other properties at this time. So I'm very excited. I've been in this business a long time, seen a lot of properties. This is one of the most exciting prospects I've ever had the pleasure of dealing with. So stay tuned. I think we're going to have some success here.
And Bill, you have a third property to tell us about.
Yeah, the third property is actually two properties. Now, we only own 33% of each one, but we're doing all of the work for the other two parties who are financing it. And hopefully we're going to be able to increase our interest to 50%, but I don't think it'll be any higher than that. But 50% of this property is going to be enough to make a difference to it's enough to make a difference to our market capitalization again. This is probably the most densely mineralized area in the Taca district and in northwestern Argentina. The property's been known since 1990, and it was owned by Barrick. They got it when they acquired Argentina Gold, and they were looking at Veladero and Pascua-Lama, the two properties that Argentina Gold had. Those were what they wanted. They were big-scale epithermal systems. They never took the time to review what this property is. We now think it's an orogenic gold deposit, which means that's a new name for mesothermal, which means that this system, the vein system, and the mineralization can go to depth. Depth meaning a couple of hundred meters. A couple of thousand meters, and it starts as a surface open pit and will morph into an underground mine if we're successful drilling it off. So we have continued to look at the Desierto 1 and 2 area because of the density of the mineralization. And with all good areas, when you start looking at them more thoroughly and more critically, they usually get better. Well, that's what's happening here. Our prospectors, Ron Bilquist, has just found a brand new area that has never been seen before. It's a barium and gold zone, and it's very close to the Grand Vein, which is a very high-grade silver vein. This property now has a nickname. It's called Stegosaurus, which means big, fat, and good. So that's where we're at. We're just moving these properties forward right now. Everything is going beautifully. Everything is working in our way. We haven't made a mistake, and we're going to get aggressive with all of these properties. So good news ahead for Cascadero.
Bill, for new listeners, can you give us a bit of an overview of Cascadero?
Yeah, Cascadero, as a matter of fact, Jim, on January 15th this year, Our company's 14 years old. So I've been involved with this for 41% of my adult life, basically, and I know the area intimately. I know the properties intimately, and I believe that we've got a core property position that is as good as any junior company in the world. We have an excellent group of people, all in Argentina, that run the business for us. Our lawyers, our accountants, our office people, and our field workers are Argentine citizens and residents, and they're all coordinated right now. And we're doing a fantastic job on the ground and in the office. So I'm really looking forward to this year coming up. It's going to be very, very exciting.
Bill, where are you traded and under what symbols?
We trade on the Toronto Stock Exchange Venture Board, and the symbol is Charlie David, CCD. Currently, the stock's around 8 cents, and I'm hard pressed to understand what the downside is, because I think it's very nominal. And I think the way you have to look at these speculative stocks is that they're all uncertain, and the uncertainty can give you a really bad return, and you're going to lose a lot of money. But I don't think that's the case in anything we're working on. Everything is, in my view, underpriced, and the risk level is probably in your favor here to own the company.
And where can people get more information about Cascadero?
Well, we've got a lot of stuff on the website now, Jim. But if anyone wants to read, we've got a whole room full of reports and information that we've written. And if anybody wants to see anything further on a property, just send me an email at bill@cascadero.com, and we will send you whatever you want to read.
Bill, thanks for the update.
Okay, Jim. Talk to you soon.
My guest has been Cascadero Chairman Bill McWilliam. We were speaking on January 8th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
My guest is Don Huston. He's the chairman and president of Cypress Development Corporation. Welcome back to the show, Don.
Thank you. Good morning, Jim.
You're pretty excited in your office. You had your best hole results to date.
Yes, we did. We put out a news release here this morning on Cypress Development, and just outlining holes that we just finished before Christmas. Results back are the best holes, the best assay numbers and intercepts seen to date, and I just have to say they will not be our last. As we move forward with this drill program, and now what we're calling an infill drill program, we anticipate our grades to increase, both in grade quality and in size, as in depth, surface down to about the 300 foot, about 85 meters thick. The numbers that we're getting are in excess of 0.1%, about 0.12%, which is for Clayton Valley, Nevada, is very high. And as I say, we're now getting ready for the about the end of January, I'd say, weather permitting down there. Even being Nevada, they still have the desert that we are in. Clayton Valley is in the high, just off the high Sierras, and it still gets bad weather and get winter and all the rest. So we're just waiting for weather, and we will be back doing infill drilling on this Clayton Valley Lithium project here as soon as possible.
For new listeners, Don, could you give us a bit of a background for Cypress?
We've had this land, this acreage, the Clayton Valley Lithium Project is two properties that are contiguous to each other. We own both 100%, one called the Dean Project, the other one called the Glory Project. Totals about 4,500 acres on the east side of the of Clayton Valley. We adjoin lithium production with a company called Albemarle. We are on their east boundary. They produce their lithium out of the brines, the salt water in the huge aquifers underneath Clayton Valley, and Cypress is looking at being on the edge of these aquifers. We're looking at the claystone, want of a word, mudstone, claystone that sits above the aquifers, and we have been very, very fortunate to discover that this claystone thickness of about 100, 120 meters from surface down to just above the aquifer, it contains a lithium grade also. And we're pursuing that avenue, and hopefully to find a methodology to be able to extract the lithium economically.
Well, lithium now seems to be one of the hottest products on the planet. Have you found renewed interest in your company because of that?
Yes, we have. Yes, we have, Jim. You're absolutely right in saying that lithium has become the hottest, but certainly a very, very hot commodity, mineral demanded for on this planet. Your Teslas being one, is especially in the state of Nevada, but the Chinese, and other countries that are wanting to move away from fossil fuels. I'm talking about coals or oils, etc., and just to be get environmentally green or pollution free, whatever you want to say, demand this lithium, being at the way of the world here today in developing batteries that will contain enough power to drive cars, to do almost anything you can imagine. And the major component building these batteries is lithium. And so they're in the world demand for it, and we're seeing it in the junior public sector where Cypress dwells, in being an explorationist looking for lithium. We have eyes on us now from bigger companies that are wanting to know what we have, wanting to know what our size is, and wanting to know what can be done with it. Can we produce it? As I say, we are maybe 250 miles away from the Tesla's Gigafactory just outside Arena, Nevada. So what a wonderful suitor. And as I mentioned earlier, next door to us is a lithium producer, Albemarle. And Albemarle trades $120, $130 a share on the New York. And they've been in production in this Clayton Valley since the mid-1960s. They're not going away. Are they watching what Cypress Development is doing? Yes, I say they absolutely are. And sooner than later, I think the street, the general public will see that what Cypress is wanting to develop and moving forward with drill programs and with laboratory working and testing, etc. It is not very, very long in the future that we'll see very, very, very positive signs with Cypress's movement forward with the lithium.
Don, where is Cypress traded and under what symbols?
We trade on the TSX Venture, symbol CYP, and we trade on the Frankfurt C1Z1, and very, very readily found. We're not a volatile company, but a very liquid company. We have about 55 million shares outstanding, and it's well-placed stock. It has traded well. It's moved, in the last few months, it has moved from 10 cents to 30 cents. It's been aggressive with its lithium exploration, and we're looking for a much better 2018.
Don, how can people get more information about Cypress?
Cypress Development Corporation at email me or the company at cypressdevelopmentcorp.com, or I'm the president, D. Huston at sentinelmarket.com. Toll free 1-800-567-8181 at any time. Make myself available to all shareholders, and I would be more than pleased to be able to tell anybody with what we're doing here.
Don, thanks for the update.
Thanks, Jim. I appreciate your time.
I've been speaking with Don Huston, President and Chairman of Cypress Development Corp. Their website is cypressdevelopmentcorp.com. We were speaking on January 9th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jared Lazerson. He's the president and CEO of MGX Minerals. Welcome back to the show, Jared.
Hey, Jim. How are you?
I'm doing great. What kind of an update do you have for us about MGX?
Big week this week. We announced technology that had been developed, but really a showcase of the acquisition of Zinc, a zinc air flow battery company, acquired last month. The big announcement was really to showcase their proprietary and patented technology that deals with the largest, most significant hurdle in zinc air flow batteries, which is the buildup or the generation of zinc dendrites, which is a 3D snowflake shaped particle that can build up, draw down the zinc, which is the primary charged element in the electrolyte. So you're both drawing fuel and you're doing the equivalent of corroding your membranes and clogging your membranes within the fuel cell. This was solved, and actually those dendrites are then able to be reprocessed as fuel, so there's no actual loss of fuel, nor is there interference with the membrane. This is proprietary and patented technology, so we made an announcement about that, really paving the way for the redesign and mass production of zinc air batteries, a very low-cost alternative to lithium-ion or the equivalent vanadium flow battery, far superior in many ways than lithium-ion. The one issue really is just they're a bit clunky. They are large, not huge in terms of footprint, but much larger than lithium-ion in the case of electronics or electric vehicles. Really no application, but ideal for low-cost mass storage to support solar, wind, grid power augmentation, to replace or augment diesel generators. We really believe that this is going to be the go-to moving forward in terms of mass storage, not lithium-ion as some groups might have you think.
Can you give us a bit of a background about MGX Minerals for our new listeners?
Sure. MGX Minerals really now has become all things energy related without actually being producers of energy. So we are moving our silicon projects ahead, for example, to support production of solar panels. So the silicon, the high-grade quartzite, we're the largest holder of non-frac sand quartzite in Western Canada and the U.S. On the other side of the solar panels, like I mentioned, we are now into low-cost mass storage. So we don't produce the solar panels and generate the power, but we do look to produce the silicon and are now moving towards mass production of mass storage. So just to kind of rattle it off, we are in lithium with some of the most advanced lithium extraction technology in the world. But again, we don't make the batteries, we don't make the cars, but we look to produce lithium and have produced lithium on the pilot scale and are just ramping for commercial deployment of our lithium extraction technology. Big game changer, paradigm shift. No more solar evaporation ponds or limited solar evaporation ponds, and very low cost capex, especially compared with what it now takes to build a new solar evaporation circuit. A square mile of double-line ponds. This is probably going to be a thing of the past over the next year as we commence deployment. Our first deployment we're expecting within 60 days here. We're just finishing up flow testing and commissioning of the system. We're in magnesium. We're weeks away from a PEA on our 8 million ton measured and indicated magnesium oxide, which is the basic compound of magnesium project just outside of Cranbrook, BC, largest new magnesium project in North America. Again, magnesium, lighter, stronger, a third lighter than aluminum, and stronger. If you want lighter vehicles, lighter aircraft, you need more magnesium. So again, all things energy, but not actually producing energy. That's how I would describe MGX these days. We're the largest lithium brine landholder by acreage in North America, 2 million acres, mineral claims or options. So it's a broad company. We also hold some traditional assets. We have 100,000 acres of oil and gas and mineral lithium-related leases in Utah. We call that a petrolithium. So we're big in all things energy, advanced materials, as well as some traditional energy and storage and energy technology assets.
Where is MGX traded and under what symbols?
MGX is traded on the Canadian Securities Exchange, CSE, under XMG, and on the OTCQB under MGX. MF, as well as in Frankfurt under 1MG.
Jared, where can people find out more information about MGX Minerals?
The best place is the website, mgxminerals.com, but we also have a huge amount of media coverage. We're a very interesting company, so even a Google search or a cursory Google search will provide you with a lot of very interesting third-party analysis. The reason I say that is because different media groups, even within the energy space, have very different takes and very different questions. So third party I would search as well as on the website.
Jared, thank you so much for the update.
Thank you, Jim.
I've been speaking with Jared Lazerson. He's the president and CEO of MGX Minerals. We were speaking on January 11th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.